Welcome to our class of the day. Today we're going to talk about a really critical question, one that affects how tons of us work and pay our taxes. Are you an employee or are you an independent contractor? The answer has these huge financial ripple effects, from what you can deduct to how you pay into programs like CPP. So getting it right isn't just important, it's absolutely essential. It feels like it should be a simple question, right? But the truth is, it can get surprisingly complicated. And if you get it wrong, you could be looking at some really unexpected tax bills, not to mention some pretty hefty penalties. So let's break down exactly how the system works, so you can be confident you've got it right. Okay. So before we can even start comparing the two types of workers, we have to begin at the foundation. We have to talk about net income. For tax purposes, this is pretty much the most important number there is. It's the starting block that everything else gets built on. When we talk about your income for tax, it's not just one big pile of money. Think of it as being made up of five distinct sources. You've got employment income, from a regular job, business income, from being self-employed, property income, from things like rent or investments, capital gains, which is what you make when you sell an asset, and then there's a little catch-all bucket for other sources. So you add up all the net income from those five different sources, then you subtract some specific legally allowed deductions, and voila. What's left is your net income for tax purposes. This is the number. And as you're about to see, how you earn your main income, whether it's from employment or from business, sends you down one of two very different paths. And here we are at that fork in the road. This is the whole ball game. Whether you're classified as an employee or a contractor determines which income bucket you fall into, employment or business. And believe me, that changes absolutely everything at the most basic level. It's this simple. An employee earns employment income, an independent contractor earns business income. Now, I know that sounds like just a small difference in words, but it creates two completely different financial worlds. They have different rules, different responsibilities, and even different opportunities. Let's look at the financial reality side by side. For employees, deductions are very, very limited, but for contractors, it's a whole different story. You can generally deduct any reasonable expense you had to pay to earn your income. Then there's the Canada Pension Plan, or CPP. Employees pay half, their employer pays the other half. Easy. Contractors, you're paying the full amount yourself. The same thing happens with tax withholding. An employer takes it right off your paycheck. Contractors have to be disciplined, save up, and pay their taxes in quarterly installments, and they might even have to register for and handle GST. And, the differences go way beyond just the money. Employees usually get things like benefits, vacation pay, and a certain amount of job security. Contractors, on the other hand, trade that security for control. They get flexibility over their hours, the freedom to work for different clients, but they also have to carry all the risk and fund their own benefits. Even the tax filing deadline is different. It really is that classic trade-off: security in exchange for autonomy. So what happens when the lines get a little blurry? How does the Canada Revenue Agency, to CRA, actually make the call? Well, they don't just take your word for it. They've got a whole series of tests they use to figure out the true nature of the working relationship. And this is so important to understand. There's no single magic bullet factor that determines your status. It's not like a checklist where you tick a few boxes and congrats, you're a contractor. No. The CRA looks at the complete picture, weighing all the different facts together to see what story they tell. This is the framework they use to figure it all out. Each of these things, from what you intended to do to who's really in control to who takes on the financial risk, it's all a piece of the puzzle. They all matter. But we're going to zoom in on a couple of the ones that are usually the most decisive. So the first test is intent. You can have a contract that's covered in the words independent contractor, but this quote makes it perfectly clear if the reality of how you work looks like an employee-employer relationship. That contract isn't going to save you. What's actually happening on the ground will always win out over what's written on the paper. And that brings us to what is often the most important factor of all, the control test. The question is simple, but it's incredibly powerful. Does the person paying you have the right to tell you how to do your work? when to do it, and where to do it? If the answer is yes, that's a huge pointer towards an employer-employer relationship. If the worker has the freedom to choose, that points much more towards being a contractor. Okay, another crucial test is all about financial risk. Think about it like this: an employee gets a paycheck. Period. They have almost zero financial risk, but an independent contractor, they're running a business. And a fundamental part of running any business is the very real chance that you could actually lose money. So, what does that risk actually look like? Well, it means you're covering your own costs. It means if a client decides not to pay you, that's your loss to absorb. If your computer breaks, you're the one who has to go out and fix or replace it. And it usually means you're hired to complete a specific project, not just to work for someone forever. These are all the classic signs of a real business relationship. We've talked about the differences. We've gone through the tests. Now let's bring it all home. What are the actual consequences of getting this wrong? Why is this classification so incredibly critical, especially for the organization that's paying the worker? The stakes here are incredibly high. If the CRA comes in and reclassifies a contractor as an employee, the financial damage to the organization can be massive. They could suddenly be on the hook for all the income taxes that were never withheld, and get this, they'd have to pay both the employers and the employees' share of CPP and EI premiums, plus huge penalties and interest. It is a very, very expensive mistake. And here's a myth we really have to bust. So many people think that if they just set up a corporation, that automatically makes them a contractor. It doesn't. You can't just hide behind a corporate structure. The CRA applies the exact same test to the relationship, and if it looks and smells like employment, they'll classify you as a personal services business. And trust me, that comes with some seriously negative tax consequences. So we end right back where we started with the reality of the relationship. It's not about the label you slap on it, and it's not about the piece of paper you signed. It's about the facts on the ground every single day. Understanding that difference and making sure the story your working relationship tells is the right one is what truly matters. Thanks for watching. If you found it helpful, don't forget to leave your like and subscribe for more videos like this.